Off a few hours here to that closing bell. And for me, as you could see, all about the L-shaped recovery. Credit Suisse, Sultan Posner, of course, at it again with some of the latest note. And Katie, I think for me, when we think about an L-shaped recovery, not a V-shaped economic rebound, L, that you actually have to keep economic recovery depressed to help the supply side, give it a chance to recover, to also help make sure that inflation is tamed. That really was the theme of the notice. We again in white here look at the year-over-year inflation numbers just continuing to astound us at these 8-9% levels, and a Fed funds rate that indeed is going to have to come up if that is going to be the continued focus of dampening down some of that economic activity.
Hillary, I have to say, as I was reading that note, I really had to think about my letters and what an L looks like and what actually that means in practice. But Posner coming out and saying Fed might have to hike to 5 or 6%, Tim. I don't think that's anyone's base case.
Yeah, and the question is with the L is how long does that lower part of the L last for, right? If we do see it moving flat just into the future. Well, we're trying to figure out who the bulls and the bears are, and they're coming out vocally right now. And Marko Kolanovic over at JP Morgan really stands out. He's one of the few bulls among Wall Street's top strategists who say that U.S. stocks are going to rally into the second half of the year. Check out what he wrote in a note that was dated yesterday. Quote, although the activity outlook remains challenging, we believe that the risk reward for equities is looking more attractive as we move through the second half. The phase of bad data being interpreted as good is gaining traction, while the call of peak Federal Reserve hawkishness, peak yields, and peak inflation is playing out, Taylor.
You would maybe argue that the bond markets today, some of the Fed speak today, Caroline, goes against that. When you have a lot of Fed speakers coming out and saying that we still have a lot of work to do to help tame that inflation that, as I'd mentioned in the previous chart, a nice reminder, we're still above 9% on headline CPI.
For now.
Yeah, you were very excited about an 8.8 read yesterday, Tim. Meanwhile, you know, all pullbacks are good pullbacks when it comes to inflationary pressure. What's not pulling back, of course, is Nancy Pelosi. She is there in Taiwan, landed. And of course, maybe the market reaction is one of vague relief that not more has been discussed by China in terms of reaction function to this. But I just wanted to highlight a great chart coming from our own Dan Curtis, sort of pointing out this is why it's so important. You talked about supply chain, Taylor, giving the supply chain some time to be able to fix itself. Well, how's that going to happen if we dial up concerns and certainly geopolitical tension between the US and China, when about 50% of world cargo ships come through the Taiwan Strait, which is also important, going from China, Japan, Korea, Taiwan to the West. We do not need any tensions to surround supply chain once again, Tim.
Yeah, you make a really good point, and it was really interesting. Ian Marlowe, who's coming up on our program in just a couple of minutes with an article out that shows the flight path of this plane avoiding the South China Sea as a result of those tensions with China.
Yeah, and let's add those geopolitics to the wall of worry that we're seeing. But look, it's not all doom and gloom, as I feel like sometimes the market is interpreting it. Just check out Uber earnings. They were actually pretty good. We had the CEO, Dara Khosrowshahi, on earlier. Take a listen to what he had to say.
While trips were up 24%, which is really, really healthy growth, gross bookings were up faster than that, which indicates some inflationary effect on our results. I think the good news for us is that surge levels are actually coming down, ETAs are coming down. So as the marketplace becomes more balanced, we actually see strength in terms of trip growth going forward.
I mean, Katie, I got to admit, those Uber results, they really blew me out of the water.
Yeah, overall, we do have to keep an eye on Uber. Lyft, important, of course, coming out a little bit later. And after the bell today, Airbnb, we're going to be looking at Starbucks and the like. Katie, still a lot to digest.
A lot to digest, including that jobs data on Friday. We got the JOLTS data today, though, which was very interesting. You actually saw some evidence that there was an easing, the JOLTS numbers decreasing actually to a 9-month low. We'll see if we see any evidence of that in the NFP numbers on Friday.
1.8%, right? The jobs per employed, 1.8 per person, which I think is still notable because it's really strong, Taylor, even though it's down from 1.9 and 2.
Wonder if this is the soft landing that the Fed is trying to achieve, slowing, bringing down some of those job openings without trying to get a big spike in the unemployment rate and that tension that we continue to see in this data.
What a delicate needle to thread. What an interesting problem. We'll see if they can do it.
All right, well, that is going to do it for our cross-platform coverage. Tune in just a bit for our countdown to the close. You're listening, watching Bloomberg.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Kriti Gupta live in the Bloomberg Interactive Brokers studio. In just a couple minutes, we're going to be joined by Ian Marlowe. He spent years reporting in South Asia, also a couple years in Hong Kong. We're going to get the latest on what's happening out of Taiwan. Also, one more check of the markets as we do get close to 90 minutes to the close. We're seeing the S&P 500 down a little more than 0.1%. The NASDAQ still in the green, while the Dow is the underperformer, down 0.7%. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stanovic and Kriti Gupta. We're live in the Bloomberg Interactive Brokers Studio. I told you we are going all in on geopolitics. Nancy Pelosi's visit to Taiwan, which right now is ongoing. She landed there a couple hours ago. We're going to dig into that with Ian Marlowe, senior government reporter for Bloomberg News. We're going to check in with him in just a minute. First, though, Charlie Pellet, less than a half hour to go.
Indeed, we're looking at a mixed market, Nathan, with the Dow, the S&P both lower. NASDAQ is higher. Nancy Pelosi's trip to Taiwan certainly dominating headlines today, but Mandy Zhu, chief equity derivative strategist at Credit Suisse Securities, says the broader story in the region is COVID and the impact on China's economy.
On the topic of China, clearly a lot of headline risk in the near term, but actually the much bigger risk and what I've been emphasizing over the past few months in terms of the outlook for China, outlook for global economy, is China's zero COVID policy. And that's going to have a much bigger economic impact. It's going to have a much bigger market impact than whatever happens, in the next 24 hours on the geopolitical front.
Stocks are declining. Choppy session today as investors assess prospects for those rising tensions between Beijing and Washington, while Federal Reserve officials are reaffirming their commitment to bringing inflation under control. So here's where we stand right now. We have got the NASDAQ Composite Index up now by about 47 points. That's a gain of 0.4%. The Dow, the S&P, they are both lower. S&P right now, little change, down by just 1 point. And we have got the Dow down 195, a drop there of 0.6%. Spot gold down 0.3%, 1767 the ounce. 10-year yield 2.73%, and West Texas Intermediate crude up now by about 0.5%, 94.39 a barrel. Lots of earnings today after the close of trading. Among some of the names out today: AMD, MicroStrategy, Airbnb, Starbucks, Electronic Arts, and Occidental Petroleum. Recapping, mixed Tuesday, S&P down now by 0.5 point, the Dow lower as well, NASDAQ up by 50. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we mentioned geopolitics front and center just after House Speaker Nancy Pelosi landed in Taiwan a few hours ago, becoming the highest-ranking American official to visit the island in 25 years. China says it will conduct missile tests and military drills around Taiwan. We've got a great guest joining us right now. Ian Marlowe is senior government reporter for Bloomberg News. Ian spent a couple of years as a correspondent for Bloomberg News in Hong Kong, covering regional Asian politics, geopolitics, security, and trade issues. Before that, he was in India covering South Asia. Ian, really good to have you with us this afternoon. I want to go to a story that you wrote late yesterday. Why is China so on edge about Nancy Pelosi's visit?
Yeah, thank you. I think it's a good question. I mean, she's not only the highest-ranking U.S. official to visit in 25 years, as you say, she's also just a particularly strong China hawk who, has been defying China on a lot of these things, on human rights, on trade issues, on other things for most of her career. I mean, if you look back to just after the Tiananmen Square crackdown in 1989, her and a couple of other senators unfurled a little banner in Tiananmen Square, commemorating those who died, something, that seems unthinkable now, but shows you just how far she's willing to go in terms of, sticking up for, her values and other things at the risk of at that point, personal safety, but also on this trip, geopolitical ramifications. I mean, she was willing to go through with this. We can talk about whether she was ever going to realistically be able to back down after the trip was announced, but she was willing to go through with this, even though there were obviously huge consequences. And I think, a visit to Taiwan at any given point in time for China is very sensitive. They protest, regularly when these types of delegations go, but it's just the seniorness of her going is just a little bit too much for China to bear right now, especially given the sensitive domestic dynamics in China.
Right. Well, I think what's so interesting about the timing here is it's happening at the same time as you have two massive bills, I believe, passed through Congress. You have the $52 billion CHIPS Act over 5 years, and then on top of that, you have this order from the Commerce Department, I believe, for a lot of these names like Intel and NVIDIA to actually not, that disincentivizes them to increase their fab production over in Taiwan and China. So
exactly. I mean, it's not just about human rights. It's not just about ideology. It's about strategic economic competition between the two. And she's been part of a sort of what's now kind of a broadly at various times, generally bipartisan push to sort of decouple from China and to push to push the U.S. sort of manufacturing industry, especially in high tech, towards a more competitive edge with China. After a few decades where China really has benefited from, relatively stable and friendly international economic order.
And do you think it's going to work, though? I mean, if you actually, I've spoken to a few people on this, $52 billion over 5 years, by the way, in the context of a huge industry. I think $52 billion is like 10% of 1 year of the entire semiconductor industry. If this really was a goal of the administration, why not put even more money towards it?
Yeah, I mean, I think that's a very good question. The global chip industry is something that a lot of, like with any manufacturing, countries want to bring it home. They want to bring it close to, to their other industrial base. But America is not the only place that is, putting these types of bills in place, dedicating billions of dollars to, funding those types of companies. And I think the brute reality here is that this technology, this manufacturing capacity is not in America right now, and it won't be for many years to come. And that's both structural, and it's also a matter of policy, with America sort of being late to this compared to, to whether it's places like Taiwan or South Korea or China itself.
Oh, good point, Ian. Hey, just in the last minute we have with you, take us through this type of military exercise that China announced a couple hours ago. How out of the ordinary is something like this?
Yeah, so China regularly pushes, into Taiwan's air defense identification zone with flybys and sorties. The idea that we're going to be seeing live missile firing off of the coast of Taiwan is really remarkable. But if you look back broadly to 1995, when we had the last Taiwan Strait crisis after the then U.S. The president in Taiwan, the first democratically elected president, was going to visit the U.S. and China was trying to express its displeasure there. We had live missile firing then as well, and so it's something that's obviously extremely high tension in terms of recent years, but it's not thoroughly unprecedented if you look back in the kind of long arc of history.
Ian Marlowe, just a great voice on this. Really appreciate you taking the time. Senior government reporter for Bloomberg News. Before being based in Washington, D.C., he was in Hong Kong for a couple of years. Then before that, 3 years in India covering South Asia. Ian, really appreciate you taking the time this afternoon. Let's stay in Washington, D.C. and go to World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. House Speaker Nancy Pelosi has arrived in Taiwan for the first visit by a U.S. official that high-ranking since 1997. This all comes despite repeated warnings from China of a strong response. Bloomberg Washington correspondent Anne-Marie Hordern has more from Pelosi herself.
She put out a statement. She's tweeting now live from Taiwan, talking about that she wants to support democracy, especially in the face of autocracy. But she also said that this does not change U.S. policy, the one China policy.
Bloomberg's Anne-Marie Hordern. China has announced that once Pelosi has left, it will conduct 4 days of military drills encircling Taiwan beginning on Thursday. President Biden says justice has been served 20 years after 9/11. Al-Qaeda leader Ayman al-Zawahiri was killed last weekend in a drone strike in Kabul. Bloomberg's Joe Matthew reports this was a significant target.
We're not only talking about one of the architects of 9/11, but even the USS Cole bombing a year earlier, and someone who had been sought for years and years.
Bloomberg's Joe Matthew reports the president also sees this as evidence that the U.S. can reach its enemies even without a troop presence in Afghanistan. Senator Joe Manchin says he is working to advance his $433 billion tax, climate, and health care measure by speaking to potential holdouts, Senator Kyrsten Sinema. He told West Virginia's Metro News Radio he will talk with Sinema sometime this afternoon. She has expressed concerns about raising taxes before, and Manchin says this does not raise taxes but does close some tax loopholes. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Kriti Gupta live in the Bloomberg Interactive Brokers studio in New York. Kriti, among the most read on the Bloomberg terminal this afternoon. After years of just missing out on the top spot, JP Morgan Chase, equities trading business, has finally eked out the #1 place on Wall Street.
This is an enormous conversation right now because at the same time, we are actually getting a lot of deal news from banks. Actually, TD, for example, talking about acquiring Cowen. Why? To build out their capital markets. Right, but to acquire their capital markets business. So it's really interesting how there is kind of this fight on Wall Street for who are going to be the market makers of tomorrow.
That's a really good point. Here's what Jason Sippel, JP Morgan's head of global equity, said in an interview, citing the record performance in both flow derivatives and exotics. Quote, "We've caught up, but our goal is to be #1 consistently. There was no major transaction that drove it, but a lot of things went right." Look at that.
Yeah, a lot of things went right. But look, I mean, in a volatile environment that we're seeing a VIX at 23. This is extra impressive because remember those massive trading profits we got in 2020 and 2021? Well, it's because the markets were going haywire. So to see them really come out on top in this environment or in this quarter of low volatility, that's a massive deal.
JP Morgan, Morgan Stanley, Goldman Sachs, Citigroup, and Bank of America together saw equities revenue rise 9% in the second quarter compared with a year before, with equity derivatives revenue up 15%. That's according to Coalition Greenwich. I should note that of the 9 major investment banks to report so far, Credit Suisse, which last month posted a larger than expected second quarter loss and replaced its CEO, came in bottom. The bank, which was badly burned by Archegos, saw equities revenue fall 33% on a dollar basis to $342 million in the second quarter from $509 million created in the same period a year ago.
I'm really glad you brought up the Archegos fiasco because there is a quote in here by Jordan Galhardo Burnett, the head of publications insight at BCG Expand. He says, well, that perceived stability in JP Morgan, well, it could have helped drive that 15% jump on its results.
No, that's a good point. All right, check the story out on the Bloomberg terminal. It is among the most read. We got much more Bloomberg Business Week coming up in just a few minutes. You're listening to Bloomberg Radio. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It has been a choppy Tuesday, lots of cross currents. Stocks are declining as investors assess prospects for rising tensions between Beijing and Washington, while Federal Reserve officials reaffirm their commitment to bringing inflation under control. Right now, the S&P down 9, drop there of 0.2%. We have got the Dow lower by 271, a decline of 0.8%, and NASDAQ is up 20, a gain for NASDAQ of 0.2%. 10-year 2.73%. We do have spot gold right now down by about 0.3%, 17.67 the ounce, while West Texas Intermediate crude is up 0.7%, 94.51 a barrel on West Texas Intermediate crude. Right now, again, we have got the S&P down right now by 0.3%, down 10 points. After earnings, briefly, we do have Uber surging 18.1%. Lyft will report on Thursday. Lyft shares up now by 15%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Well, the upcoming issue of Bloomberg Business Week magazine, available now online at Bloomberg.com and on the Bloomberg terminal, is a story about an epic bank scandal in China. Authorities say bankers at 5 local lenders stole money from depository, and that's shaking confidence in the broader rural lending system. Pat Regnier is Markets and Finance Editor at Bloomberg Business Week. He joins us via Zoom from New York City. Pat, good to have you with us. So let's take a step back before we dive into this story. How does rural lending work in China?
Well, I mean, it's actually very similar to, I think, things we might know of here, where you have these kind of networks of local banks that are there to kind of, plow money into the countryside and businesses that have kind of historically not had enough capital. Editing this story, I was really reminded of kind of analogs to the savings and loan business here in the United States.
Interesting.
A long time ago. Very, very similar kind of situation in a lot of ways. And what some of these rural lenders were doing was they were offering people higher rates to attract deposits, and some, alleged bad actors got involved in this. There was a company that that was a major shareholder in 5 of these rural lenders. There was essentially a scam, and then that created really a mass movement of depositors demanding their money back.
Pat, talk to us about the trust factor here, because if you need to make a lending system work, at the core of it is you need that trust factor. What is at stake here when it comes to whether or not this is a system that can get recovered?
Yeah, I mean, I think this is actually a broader issue in China generally. This is one of a couple stories that we've been monitoring. We've also been monitoring this boycott on mortgages. Now, this is a different situation, but it involves developers who've built houses that they're not delivering. So you've had a lot of consumers in China who've really gotten a push for, give us your money and we will give you a higher rate. Buy this apartment and you'll have we'll deliver this apartment. And they're finding that these promises are not being made good on. The difference in China and here is that then China also has a very powerful state that also has, large ownership shares in all of the big state banks, and can kind of come in and exert some control. But we're just seeing this control fray, and so we're seeing, protests on the street and grassroots movements to kind of, resist these things when they come along and really hurt ordinary Chinese consumers and households.
Do those ordinary Chinese consumers and households you're referring to, do they have any power when they go to the streets?
Well, I mean, it looks like they exerted some recently. There was a very large protest in Henan province, and they were met with there were kind of violent clashes with security forces. I understand a lot of them were sort of plainclothes. And it looked pretty bad. And now we're kind of seeing that here are the authorities. They're coming in, they're saying, we're going to step in and we're going to make depositors whole, and we're going to crack down on this rural lending system that we had earlier kind of loosened up on in order to make capital more available. And this is that kind of seesawing that, from here in New York, as I edit these stories and I see them, that you really see out of China is there's both this kind of tight control and then a kind of a freewheeling consumer finance sector. And authorities are always kind of trying to find like the balancing point for this. And when it doesn't work, things happen on the streets.
That consumer financing sector is so crucial here because, didn't China have, and correct me if I'm wrong, Pat, but didn't China have in 2015 this massive kind of retail trading boom that it never quite recovered from? I want to say a lot of Chinese stocks are owned by the Chinese consumer. So to see it once again become a consumer lending story, I think it's pretty interesting when it comes to how developed Chinese markets are actually getting.
Yeah, and we've also seen all these issues with like wealth management products that have been heavily sold and then, maybe turned out to be riskier than people thought. And then, you've seen China kind of trying to decide what it wants to do with these companies, these big tech companies that have IPO'd and, suddenly start to look like both, separate power centers as large companies can be, but also maybe are taking on new financial risks that the regulators are trying to get their hands around. At one point, there was an online lender through a phone app that, I think was like the largest money market fund in the world. So you have this really kind of protean, dynamic consumer sector, sometimes with a lot of envelopes being pushed, combined with a state that both, really like wants to encourage investment, but also, has its eye on, social control and, and then you see things kind of, happen in terms of protests.
Well, Pat, speaking of social control, the story that you edited in the current issue, or the upcoming issue, I should say, of Bloomberg Businessweek magazine, it ends with COVID-0. So we got to talk a little bit about what's going on with COVID-0, and not necessarily an update, but the weight that it's having on the economy right now, not just from the perspective of economic growth or lack thereof, but from the perspective of politically and what it means for China's future in terms of leadership.
Yeah, I'll be careful here because I'm not an expert on what's happening with COVID-0 in China, but I do think that there is this kind of overall overlay of, on top of all of this, you have the fact that, China has been very strict in its COVID controls, and that's creating a lot of social pressures and also, constraints on business. As one of the people we talked to, it's like all of this stuff is another risk getting baked into a big risk cake in China.
Right.
A big risk cake. I love that. Pat, in the minute we have left with you here, that big risk cake is the exact, I want to say, disincentive for a lot of Western investors to hop back into China. This story isn't exactly supportive of that, is it?
No, it's tricky though. It's hard to get a view from this in some ways from outside. We've seen, all of these problems with Evergrande unfolding last year, and you look at it and you think like, well, is this China's Lehman moment? And then things seem to kind of move a little bit slowly after things start to look bad. And then somehow these stories kind of keep coming back. So you sort of wonder, is this going to be, going to go very slowly and then all of a sudden?
That's certainly the question. Pat, we're going to have to leave it there. Pat Regnier, Markets and Finance Editor for Bloomberg Businessweek, joining us via Zoom from New York City. So if you're watching us on YouTube, you got to see him there. This story in the upcoming issue of Bloomberg Businessweek magazine, epic bank scandal in China adds to social tensions over finance. You can read it now, though, on the Bloomberg terminal and at bloomberg.com/businessweek. Well, we are just a couple of minutes away from heading over to our TV team for our countdown to the close coverage of the U.S. market as we get close to an hour into trading, away from the market close. Right now, the S&P 500 down by a little more than 0.2%. The NASDAQ higher by close to 0.2%. The Dow Jones Industrial Average, though, is down close to 0.9%. You're listening to Bloomberg Businessweek on Bloomberg Radio. Tim Stenovec and Kriti Gupta live in the Bloomberg Interactive Brokers studios.
Countdown to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs, Katie Greifeld, joined now by our colleagues Tim Stenovic and Kriti Gupta is in for Carol Massa, who I'm seeing is tweeting pictures of her beautiful breakfasts from the beach. But we together welcome across our platforms of TV, radio, YouTube, our audiences to discuss what is a tug of war in terms of market sentiment, Tim. And it seems to be slight relief post Pelosi's landing in Taiwan, but still under pressure on the S&P.
Yeah, under pressure. And like we talked about earlier, not a lot of conviction, but I do think you're right with this sigh of relief that we're not seeing more of a reaction from China at this point. One area where we are seeing a little bit of a reaction today is shares of companies like travel stocks, cruise lines and hotels, Carnival, Norwegian, Royal Caribbean, OTAs like Expedia, helping push the S&P Super Composite Hotels Index higher today. It was helped out earlier by Marriott after Marriott was higher, after it reported strong second quarter results, but that company is now lower. We should know cruise stocks have sold off recently, so it could be a little bit of a rebound there. Some people find it value.
You know, Tim, can I make a counterpoint very quickly about the stock market? Because I think what's fascinating here is there isn't actually, it doesn't feel like it's a geopolitical risk, Caroline. In fact, I would argue that there's a little bit of a defensive tilt in the market. The NASDAQ up 0.1%. Want to look at real outperformance? Take a look at the chip sector. It's up 0.3%. What's the trade that's worked when we're concerned about chip production? You buy chips.
And we wait for, of course, earnings after the bell from AMD and the like to get a sense check on all of that. But you're right, like there is a defensive tilt, and in fact, it means that we're getting chips off the table. Dare I use a pun there? In terms of the S&P, we're off by 0.3%, 11 points to the lower side. 4,107 is where we trade. The Dow is actually a laggard of choice at the moment, maybe pulled down by some of the industrial giants. We think of Caterpillar, of course, underwhelming on its earnings, off by 0.8. Nasdaq up 0.1%. So big tech doesn't look too ugly. Neither does the Russell 2000, managing to find some green, up 0.4%. Taylor.
So for the year, so goes the day, I guess, as energy and utilities, sort of at least energy firmly back in the lead, up about 0.25%. So not a ton of conviction, but highlighting again that leadership that energy once again presents. Utilities is interesting. It's higher despite yields rising. Typically, they do better when yields fall. And for me, it's a big rate of change day with the yield market. And then you see that in the financials, you're off about 0.5%, Katie, in the middle there of your screen.
And if we go from sort of the macro conversation, the geopolitical risks that we're parsing through, into the earnings story, we are in the heart of earnings season. Uber, what a move there, up almost 19%. You saw revenue more than double in the second quarter. You also saw gross bookings reach a record. As a result, you're seeing Lyft climb higher as well, up 15%. They haven't even reported yet, so there's a lot of good news priced into that stock. Pinterest, too, we broke this news last night. Of course, Pinterest having good enough earnings, and then Elliott confirming that they have a major stake in the company. They're the largest holder. That's continuing to boost shares today, up almost 12%. KKR, though, not faring as well. Their realized investment income tumbled 25% from a year earlier. That is clearly weighing on the stock, down almost 5%.
Hard to be making money in this market in the first half, at least. But now it's hard to make money in the bond market. Just on the day, you said it, Taylor, this is really where the action is on the day. This is a rate of change yield story. US two-year yields powering up 20 basis points, prices lower, yields higher. This is about, well, initially maybe a flight to safety. We saw a bid for bonds at the start of the day, and then Pelosi lands, we get a little bit of a reprieve, and then we start talking about what the all-important Fed presidents, regional ones, have to say about where inflation and their own, well, focus is really going in that way.
Yeah, well, speaking of the Fed, we heard this morning from Charles Schwab chief investment strategist Liz Ann Saunders. She was on Bloomberg Surveillance this morning. She said to be careful in how you interpret what many people have argued is this dovish tone from the Fed, given that the central bank wants to see a series of lower inflation readings. Check out what she had to say.
They want to be really cautious about pivoting too soon. I do still think there's probably going to be a fairly narrow window between the final rate hike, whenever that is, and the first rate cut, but it may not be as imminent as what I think this rally was somewhat on the basis of.
That was Charles Schwab, chief investment strategist Liz Ann Saunders, earlier today on a Bloomberg Surveillance. Kriti, I think a lot of people trying to make sense of the equity rally that we saw, not just last week, but for July, making it the best month, well, in years.
And the question ultimately is the bottom in. How many investors are hopping into the market feeling like you're going to make money on the defensive bid only to get burnt on that trade? And I think that's going to be the crucial question as we get those payrolls numbers on Friday.
And if the payrolls numbers confirm that the economy can handle these higher rates, I continue to get, and Ellen Zentner, Morgan Stanley just puts out her forecast as well. Those 200,000 range, Katie's, if some of the trickle numbers start to come in, maybe this really does signify that the Powell put isn't where we thought it would be, that they can continue to tackle inflation via higher rates if this is an economy that can handle it.
And what that means for the terminal rate, really where the Fed's destination is. I mean, we've heard all sorts of different estimates. The market still seems to believe it's between 3.5%. We've had some outside calls. Zoltan Polzar, for example, saying 5 to 6%. But it seems like every data point gets us a little bit closer, at least to some sort of consensus on where we could end up.
And of course, we just don't take the payrolls number as really word at the moment on Friday. We also want to push ahead to the CPI print, and many sort of focusing in on what that number's going to have and whether we get upended. I mean, really, the inflation data from last week showed that we're still roaring ahead in some way, Tim.
Yeah, we really are. And that's important to keep in mind. And I joke about the idea of inflation coming down because we are seeing a softening in some parts of the market right now.
Gasoline.
We're seeing a decline in oil prices, and we're seeing a decline in gas prices. But, you know, between 8 and 9% inflation, that's really serious. And
Tim, I thought you called the peak yesterday, though. I thought we established that.
Well, remember, peak means, you know, it's the top of a mountain coming down. I didn't call it, though. I think that's Creedy and Matt Miller who are making that bet.
I'm pretty sure you called it.
We do have a bet ongoing. It's a very, very long bet, I have to say. But basically, his argument is Tim's. Well,
I dread to think with Matt Miller involved, actually.
His argument is Tim's, is the idea that you do have inflation that is coming down from the commodity prices. My argument is, well, that's not the peak because you have to take into account rent, wages, and all the other factors. So I think I owe him like a trip to some road stop somewhere.
Yeah, you're going to Kentucky.
If I'm wrong, it's a very strange bet, but we'll see who's right.
I stand corrected. Ellen Zentner, Morgan Stanley, 300,000 is the call for Friday, and an unemployment rate that remains unchanged at 3.6 as the Fed eyes a soft landing, Tim.
I'm still interested in what anecdotal data we get in terms of the earnings still to come, what companies are saying in terms of their desire to keep on hiring. We get PayPal after the bell, we get, of course, the likes of Airbnb, Starbucks. All of this is going to be the micro data of just whether they're still hiring as much as they were, or indeed whether they're starting to cool it a little.
Yeah, are people still paying for Starbucks? Are they pulling back on
Katie is.
Every morning.
Okay.
She's the only one who's not drinking the free
just
coffee
a grande.
upstairs.
It's just a grande.
All right, that's an anecdote.
It's really good, though.
All right, we'll wait to hear from executives there. And of course, we're bringing those numbers to you live along with all the other ones for our Beyond the Bell segment. We're back together again live on TV and radio and YouTube at 4 p.m. for Beyond the Bell, where we take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Creedy Gupta. We're live in the Bloomberg Interactive Brokers studio in New York. Creedy, I want to talk a little bit about some of these anecdotes that we're hearing from companies right now as they report earnings, because if we think about last week's move, certainly obviously Fed driven, but I think a big part of it also had to do with what we heard from big tech companies and the way that they are, not the way that they're resilient in the face of a potential recession. And I think it's important to look at a company like Uber today, showing that it has the pricing power to raise prices and that people are going to pay.
Yeah. I completely agree, but with Uber, you know what's interesting is that if you actually look at their bottom line, I'm a nerd out here, bear with me, I have to.
The bottom line is nothing positive.
Look, it's nothing positive, but look, they were finally cash flow positive. Right. That's important. But they also have this kind of dynamic where half of their, I don't want to say half, but like a good chunk of their profit or their revenue is coming from rides, the other is coming from delivery. Mm-hmm. And then you have a little slither of where it's coming from freight as well, which is a business that they're trying to grow. So I'm curious what's going to be the actual driver of growth here. If we're talking about recessions, ultimately, both, I would argue, are going to get hit, and right now they're kind of teetering.
Yeah, it's a good reminder that many of the large companies that have gone public in recent years, like Uber, are not yet profitable. And we do think back to 3 months ago when we heard from CEO Dara Khosrowshahi, who said that they're going to do this focus on cash flow, and they reported strong cash flow numbers this current quarter, showing that the company is disciplined and treating hiring what did he say? Quote, a privilege at the company. We're going to have much more on earnings in just about an hour when they cross. In the meantime, much more on Bloomberg Radio coming up. We get to Charlie Pellet for an update. Or World of National News, excuse me, Nancy Lyons in D.C.
That's
Hey, Nance.
okay. That's okay, Tim. Thanks. China says House Speaker Nancy Pelosi's trip to Taiwan is a violation of the One China policy, and it now says it's planning 4 days of military drills encircling the island beginning Thursday. Pelosi landed in Taiwan earlier today. She's also receiving those strong support for her trip from Republican Senator Mitch McConnell.
After denouncing the climate change and spending bills Pelosi passed and sent on to the Senate, McConnell turned to her arrival in Taipei.
I welcome the Speaker's display of support for Taiwan's democracy. Beijing wants to dictate Taiwan's future. That is provocative. And to hear Beijing complain that Speaker Pelosi's travel itinerary is provocative is utterly absurd.
McConnell hoped that the Speaker learns in Taiwan and Asia capitals will persuade her that more money should be appropriated for defense. In Washington, Irv Chapman, Bloomberg Radio.
In Kentucky, heavy rains are diminishing this afternoon in the mountain communities that have already been ravaged by floodwaters. At least 37 people are confirmed dead, hundreds still unaccounted for. Kentucky Governor Andy Beshear.
It is absolutely devastating out there. It's going to take years to rebuild. People left with absolutely nothing.
Beshear says they're hoping the return of cell phone service will help them track down some of the missing. The Justice Department has filed a lawsuit that challenges Idaho's restrictive abortion law, arguing that it conflicts with the federal law requiring doctors to provide pregnant women medically necessary treatment that could include abortion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Kriti Gupta. We're live in the Bloomberg Interactive Brokers studio in New York. Kriti, I got a question for you.
Yeah.
How does it sound? It's a WeWork, but really expensive, and for the ultra wealthy.
Okay, well.
How does it sound?
It sounds nice.
Okay.
In theory.
I mean, you have to pay for it.
Well, how much are we talking?
All right. $125,000 to buy in share price. That's the buy-in share price. And a stunning view of Central Park comes with it.
Well, that's not bad.
Okay.
That's
Well,
not bad.
okay, maybe
I'm
I'm not
gonna add it to the
maybe
shopping
we're not the
list.
target audience, okay? This story by James Tarmy, among the most read on the Bloomberg terminal. New York is getting another private club, this time in the form of a co-working space for the super rich. It's developed by Edmund Safra, a member of the billionaire Safra family, and restaurateur Juan Santa Cruz. The club is set to occupy the entire 37th floor of New York's GM building. It overlooks Central Park and the Plaza Hotel.
Yeah, and the club, which is named Colette, by the way, it's a lovely name, aimed at the itinerant global rich who have second homes in New York or perhaps even live in the city but don't need a full-time office. This, of course, coming from Juan Santa Cruz. He says, I've been thinking about this for a while, and the world has been evolving for quite some time, and the pandemic has made it more evident that people do not use their offices as much as they think they do or wish they did.
Okay, so you're going to have to wait until March of 2023, so a little less than a year until it opens. It's going to have 23 private offices, conference desk, a seating area, video conferencing hookup, individual temperature and light controls. Each office is going to measure approximately 400 square feet, and there will be conference rooms, a members lounge, and a series of other meeting rooms too.
It's actually really close to us, Tim. Very close to Bloomberg headquarters
Yeah,
here.
we could go.
Yeah, we could go visit.
I mean, we've got a great office to work in here.
We do, admittedly, but this one looks nice based on the pictures. You guys should check this out, the story out on the Bloomberg terminal. But basically, it says guests are going to enter through a dedicated ground floor entrance on 59th Street and be whisked up to the club, where a discreet, friendly staff will be on hand to bring coffees and serve as a de facto support team.
Okay, $125K to buy in, and then another $36,000 each year.
Let's do it.
All right, this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a mixed market with the Dow, the S&P, they're both lower. NASDAQ is on the plus side, but giving up a lot of its earlier gains. Let's get right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. Like you said, U.S. stocks trading mixed right now with the Dow down 337 points. S&Ps are down 18, while NASDAQ is still higher fractionally by 4. The U.S. 10-year yield jumps to 2.73%. Gold is down 5. Oil trading higher, but Bitcoin is lower by 1%. Among the main 11 S&P sectors, only utilities, energy, and telecom are in the green. And leaders to the upside in the Dow, Travelers and Salesforce, while Caterpillar fell 5% after earnings and led to the downside. Also after earnings, Molson Coors fell 10%. And wrapping things up, Starbucks, Airbnb, and PayPal. I'll report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Tim Stanovic and Kriti Gupta were live in the Bloomberg Interactive Broker Studio. Shares of Uber higher by 18% as we speak. This after the company reported revenue that beat analyst estimates, boosted by resilient demand from customers who continue to hail rides in order to take out food despite rising inflation. Joining us on Uber, Pinterest, and for a little preview of Airbnb, we got Mandeep Singh, Senior Tech Industry Analyst for Bloomberg Intelligence. He's with us right now in the Bloomberg Interactive Brokers Studio. All right, Mandeep, I want to start with Uber. Is the company out of the woods?
Well, so clearly, I think they talked about being free cash flow positive for the first time. And look, there were a lot of one-time items in that free cash flow number. So to answer your question, they're not out of the woods yet, but clearly they have a tailwind from mobility. And mobility is their strongest segment. Delivery is the low-margin business. We don't know what they're doing with freight.
Mobility is people ordering Ubers.
The ride sharing, the core ride sharing business.
When we talk about that, that's what we're talking about.
Correct. And so that has an EBITDA margins that can be sustained around 15 to 20%. They clearly are the leader across most of the markets, and Lyft is a distant second. And look, I think the numbers look very clean on that front. The problem is on the delivery side, it's a growing portion of the business, but it continues to be unprofitable. And you have to ask yourself as an investor, what is that inflection point when that business starts to show leverage? And I don't think we have an answer yet.
I'm going to throw you a curveball here.
Oh, no.
The freight business. I'm so confused by it because it's almost like when they first introduced it, it kind of felt like it was an Amazon-esque type of shipping network that they were trying to build. And yet, if you actually look at the margins of it, there are none.
Yeah, no, they are razor-thin margins in freight. And look, Uber's playbook is to diversify their top line as much as they can. That's what they try to do with delivery. And freight is a B2B business. Everything else is consumer focused. Right. So they really think they can be an all-weather company through this diversification. As an investor, they've got, 3 businesses with very different margin profiles. And I would want to invest in that core ride-sharing business, which is profitable, which can generate free cash flows. I don't think you want that diversification, especially when they have a category leadership in ride-sharing, but not in freight. Yeah. Freight, they are 7th or 8th.
So that's what I was going to ask. I was talking to Tim about this earlier. Like the trade-off between Uber Eats and Uber Ride, basically, is really interesting. We had a great visual of it on BTV earlier in the day, and I'm curious because it kind of seems like in the long term, it's a lovely vision, but in the short term, as you start to see that trade-off between the two, either the lower margin businesses or the higher margin businesses, shouldn't that have a direct impact on their stock, which, by the way, has already been tanking?
Well, so the expectations were really low. And again, any company that's coming up with better than feared numbers is being rewarded right now. And so
better than feared.
Well, and that's what the theme seems to be. Look, Uber was trading at 2 times EV to sales. Now, clearly, they were below market cap in Airbnb's market cap. So you have to ask yourself, yes, they have seen multiple compression. and their estimates will be revised downwards, but not by much, given they are exposed to travel and people are traveling. That's the most robust part of the economy, and they are passing on a lot of the price increases to consumers, which they have been taking. I think the question is, what kind of demand elasticity will we see once we are past this peak travel season, which is 3Q?
Yeah, it's not just a question here in the U.S., it's a question for Europe's economy too.
Yeah.
So you've seen Spain and Italy kind of outperform in the recent quarter because of demand for people, after 2 years of being locked down, traveling to those countries. But what happens when, fall and December hits and we don't want to do these things? Perfect segue, Mandeep, to get us to Airbnb and what we need to be watching when these numbers pass, just after 4 p.m. Wall Street time.
Yeah, so room nights is a big number for Airbnb, and that correlates directly to the travel demand. So they've been growing consistently over 50%, easier comps. I think for this quarter, consensus is around 25%. But the real number to watch out for is ADR, because that's really the average daily rates, and that will reflect inflation. If you see a spike in that, that basically means they're passing on some of the room increase costs to the consumers, and consumers are taking it. So the correlation.
What do you mean by passing that on?
Well,
because isn't it based on it's a supply demand driven market, right?
It is, but then if the demand is too high and the supply, you can't grow the supply of rooms overnight. So that will get reflected. The inflation number will get reflected in the the average daily rates of those room nights, and so. We saw that in Uber's print as well, that inflation played a role in terms of, the total trips not growing as much as the total bookings, because, trips was subdued due to the fact that, people were paying more for their trips. So they took fewer number of trips. Same thing for room nights. If the total room night growth is lower than the ADR growth, then that is what reflects
Hello,
inflation.
traders again. How are you today? I'm going to place an order to sell short Bitcoin. The price I'm looking to sell, 23,061 pounds. Okay, let's place order. All of you guys who decided to trade, here's your chance. Place your order, stay with me, and we will finish this trade together. 23,061. Okay. If you want to get the strategy, you need to go to company.uk. Otherwise, copy this trade, place your order, and wait what's going to happen. I'll let you know when we will going to fill, as soon as we will fill this order, I'll let you know our next steps. Okay, guys, stay safe.
Radio, and this is Bloomberg Business Week.
Okay, guys, as you can see, position opened on Bitcoin. We sold short at 23,061, and it's going up. You still have a chance to sell short. What's going to happen next? We're going to wait until it will start moving lower. After that, I want to remind you that we trade based on the our strategy that 1% give us 1,000 pounds. So as soon as it will go down 1%, we will place our stop loss. Okay, so we'll secure our profit, that we will not lose any profit on Bitcoin. Okay, guys? So stay with me. Good for you, all of you guys who decided to trade Bitcoin with me. And I'll speak to you later. Okay? Stay safe.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, it's Bloomberg Business Week. Tim Stenevec and Kriti Gupta. We're live in the Bloomberg Interactive Broker Studio in New York. Kriti, you love talking energy, don't you? You got to turn your mic on, Kriti.
I do love talking energy, and it's very handy because we have an OPEC meeting coming up.
Oh, good. And also coming up before that OPEC meeting, we got Stuart Glickman, head of energy research at CFRA Research. He's going to be joining us in just a second. First up, though, Charlie Pellet, we got less than a half hour to go.
Indeed, lots of earnings coming up, Tim. After the bell, we'll be all over those as they break. Right now, we have got the Dow, the S&P lower, NASDAQ is higher. Do you want to begin with crude oil because you're talking about energy coming up? West Texas Intermediate up 0.5%, 94.34 a barrel. Brent, the global benchmark up 0.2%, $100.26 a barrel on Brent. Looking at a big drop today for natural gas, down 7.5%, $7.66 per million BTUs. S&P down 16 right now. That is a drop of 0.4%. The Dow down 310, a decline right now of about 1%. NASDAQ is up 6 right now. It's been a volatile day for NASDAQ. That, by the way, a gain of less than 0.1%. So the Dow, the S&P, NASDAQ trading mix. Treasuries sank. Stocks dropped after Fed officials signaled the central bank is still intent on raising rates until inflation is under control. 10-year right now, 2.74%. Gold is down 0.5%, $17.62 the ounce. Uber surging 18.6% right now. We've got Lyft up by 15.4%. Uber reported revenue that beat analyst estimates, boosted by resilient demand from customers who continue to hail rides in order to take out food despite rising inflation. Well, as for the broader earnings picture, Victoria Green is Chief Investment Officer at G Squared Private Wealth.
Look at Uber this morning. that they didn't actually beat on revenues necessarily, but everybody's excited because they might make money down the road. And so I look at this and it's the battle between irrational exuberance and irrational misery. So obviously we have some sort of misery index, and you have the Walmarts, the Targets of the world warning about, okay, consumers are really feeling the inflation pinch, they're changing, they're stopping. But you have Amazon and Visa and Amex and Louis Vuitton coming out saying, hey, no, we're making lots of money, our customer base is healthy.
And again, Uber up now by 18.8%. Lyft, which reports Thursday, up 15.8%. Also after earnings, Caterpillar down now by 5.4%. Pinterest reported last night its shares up now by 11.3%. Recapping stocks mix, NASDAQ higher by 9. We'll call that little change. We have got the S&P down 0.3%, the Dow down by 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, last week we heard from ExxonMobil, Chevron. They posted their highest ever profits, reaping the rewards from surging commodity prices amid supply disruptions and rising demand. The earnings bonanza continues this afternoon. After the market close, we're set to hear from Occidental Petroleum Corporation. And to give us an idea of how we should be thinking about all of these companies and, of course, the price of oil, supply and demand and more, is Stuart Glickman, head of energy research at CFRA Research. He joins us on the phone from New Jersey. Stuart, how are you this afternoon?
I'm well, Tim. Thanks for having me.
Well, it's really good to have you with us. I wanted to just get your take before we get to Occidental, before we talk about last week's results at Exxon and Chevron. I want to get your take on where we are when it comes to the energy transition right now. And when I talk transition, I'm of course talking about the movement away from fossil fuels and the movement toward renewables, because I think, like a lot of people, I thought we were further along in that transition than we are, because that's come into sharp relief over this last year.
Yeah, Tim, it really has. And I think part of it is arguably wishful thinking on the part of renewables advocates. The basic problem that renewables are having in filling the gap completely for any fossil fuels you'd like to substitute away from is the problem of intermittency. And so because the sun doesn't always shine, the wind isn't always blowing, it's difficult to replace fully and have reliability. That's something that Europe discovered late last year, earlier this year, with the wind not being quite as strong as they had expected. And because of what's going on with Russia, of course, and the fact that they've moved away from coal, in some cases closed nuclear plants, they've been forced to turn back to natural gas power more than they had anticipated. I think the writing's on the wall that eventually we're going to have a bigger transition towards renewables, but I think we're probably looking towards more like end of this decade and not in the next year or two.
Well, let's bring it back then to the OPEC story, because we have OPEC coming up. Last time around, they said that we are going to actually perhaps increase some of that production. But, I mean, there's so much focus right now being put on that spare capacity or lack thereof at this point. How much of a difference can OPEC really make?
Right, Craig. So I think there's two issues. One is, do they have the ability to really ramp up production if they want it? And then the second is the willingness. And I think they kind of fall short on both accounts. Spare capacity is tight. Really, when we're talking about spare capacity, we're really talking about two major players, Saudi Arabia, of course, and then UAE hold the lion's share of that. And with Russia having more difficulty in finding buyers because of what's going on with Ukraine, there's no way for Saudi Arabia and UAE to fully replace everything that Russia's losing. But then secondly, on the willingness side, the OPEC participants, when they meet, they're going to be concerned, along with institutional investors, as to whether or not we're about to tip into recession. The factory data hasn't been all that stellar lately, and there is a fear that high oil prices might be inducing a recession. In that case, oil demand could fall apart along with GDP.
And speaking of, when you're talking about, okay, well, if the Saudi Arabia and the UAE can't make up that spare capacity, well, there is an entire country of producers that are waiting to do that, which brings me to the U.S. profit picture, where you do have a lot of these big oil names. I mean, Exxon, Chevron recently reporting these massive profits once again. How long does that last?
That's a great question, Critty. I think that the spending discipline that the U.S. oil community has had, quite honestly, was brought into place with a strong push from the institutional investors because a decade ago, the story in the oil community was all about growth. Everyone was talking about how much they could be growing production through the drill bit, and that story began to wane in late 2014 and really fell apart a couple of years later. And at that point, institutional investors said, listen, stop telling us about your growth plans and start telling us about how much free cash flow you're going to generate, what kind of cost efficiencies you're going to be able to obtain, and let's talk about income, in the form of either dividends or buybacks. And that story has really remained strong even as oil prices have crested over $100 a barrel. So if you're an oil company, you have to placate a whole bunch of different stakeholders. You've got politicians, of course, you've got institutional investors, and you have the renewable community.
Yeah.
So it's a very, very tightrope that they're walking.
Stuart, I cannot believe we're out of time. We didn't even get a chance to dig into your research on Occidental, so you got to come back and join us once again soon. Stuart Glickman, Head of Energy Research at CFRA Research, joining us on the phone from New Jersey. To Washington, D.C. we go for World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. Nancy Pelosi is in Taiwan, the highest-ranking American politician to visit there in 25 years. Bloomberg government's Emily Wilkins says her actions and words will be scrutinized while she's there.
Anything that Pelosi says during this trip is going to be closely analyzed, very closely watched. Tensions, but obviously right now between the U.S. and China are very high. And so I think a lot of people are going to be looking at the next day, looking at the meeting she's going to be having and seeing what, if any, meaning they can derive about how top U.S. officials are really viewing Taiwan at this point.
Bloomberg government's Emily Wilkins says China has already announced it will conduct military drills encircling Taiwan beginning on Thursday after Pelosi has left. Well, this is a busy primary day in 5 states.
Voters head to the polls in Arizona, Kansas, Michigan, Missouri, and Washington state. 3 of the 10 Republicans who voted to impeach then-President Trump are facing primary challenges: Peter Meyer in Michigan and Jamie Herrera Butler and Dan Newhouse in Washington. In Arizona, Republicans are choosing a challenger to Democrat Mark Kelly in a race that could help decide control of the Senate. And in Michigan, 2 Democratic incumbents, Haley Stevens and Andy Levin, are competing in the same suburban Detroit district after an independent commission redrew their state's electoral map. In Washington, I'm Nathan Hager, Bloomberg Radio.
Legislation giving veterans exposed to toxic burn pits access to expanded health benefits is on course for Senate passage as early as this evening. The legislation, known as the PACT Act, was blocked by Republicans last week after Democrats announced a deal on a separate tax and spending plan Republicans oppose. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stanovec and Kriti Gupta live in the Bloomberg Interactive Brokers studio. Kriti, are you a golfer?
So I'm not a golfer, but I went mini golfing this past weekend. Tim, let me tell you, I think it counts.
Okay.
Let me tell you, I got a hole-in-one for the Bachelorette that I was celebrating.
Nice.
And
congratulations.
I missed every single hole for like 9 rounds, except for the hole-in-one at the very end.
Okay.
And won her a prize. So that's my
great.
entire experience
Okay, from
of
the
golfing.
mini golf course to the actual golf course.
Okay, go ahead.
Okay. This is a story in the Associated Press about an enormous sum that Tiger Woods turned down to play in the Saudi-backed Live Golf Series. Tiger Woods turning down an offer that Greg Norman says was, quote, somewhere in the neighborhood of $700 million to $800 million to take part in the Saudi-funded Live Golf Series. That is some serious money, even for someone like Tiger Woods.
And of course, Woods has been opposed to live golf since late last year. He delivered his strongest comments at the British Open, where he said players who took the money funded by the Saudi Arabian Sovereign Wealth Fund had, quote, turned their back on the PGA Tour that made them famous.
So when an offer was made to Woods was not clear. Norman saying in an interview with Fox News, quote, that number was out there before I became CEO, so that number has been out there, yes. We should note that he was there at the weekend, over the weekend, at Bedminster Trump National Golf Club in Bedminster, New Jersey. That's where the 3rd Live Golf Invitational was held. Norman continued, quote, and look, Tiger is a needle mover, and of course you have to look at the best of the best. So they had originally approached Tiger before I became CEO, so yes, that number was somewhere in that neighborhood. So there's been a lot of talk about sports washing and the idea of countries supporting sport internationally to give them a better reputation on the world stage.
Yeah.
And that's the criticism with Live Golf.
Which is interesting because I think were this any other country, perhaps that wouldn't be a criticism.
Not Saudi Arabia, you mean?
Right.
Yeah, but I don't know if other countries would have the money to pony up,
Also true.
close to $1 billion for one athlete. Much more on the Bloomberg Terminal on this and more. You're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ holding on to gains, barely, little changed, up less than 0.1% right now, higher by 5 points. We've got the S&P trading lower, the S&P down right now by 17 points, a drop there of 0.4%. Dow Industrials, though, Dow also on the minus side, down 315 points for the Dow. That is a drop right now of 1%. 10-year yield 2.77%, the 2-year 3.07%. Crude oil is trading higher by 0.3%, 94.18 a barrel. Bitcoin is down 0.4%, 23,042 on Bitcoin, and gold down 0.6%, 1761 the ounce. Treasury sank, stocks dropped after Fed officials signaled the central bank is still intent on raising rates until inflation is under control. Also, we have got China-Taiwan sentiment holding on, weighing on investors today. Nancy Pelosi's arrival in Taiwan has prompted China to announce missile tests. Among the names reporting after the close of trading, lots of them: AMD, MicroStrategy, Airbnb, Starbucks, Electronic Arts, and Occidental Petroleum. Recapping, S&P down now by 19 points, down 0.5. NASDAQ just turning lower ahead of the close, down by 4 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. After months of debate, the $280 billion CHIPS and Science Act passed both chambers of Congress last week. Some aspects of the bill should be uncontroversial. Its proposal to boost funding for the National Science Foundation, for instance. Yet the bill also devotes an astonishing amount, some $52 billion, to propping up the U.S. semiconductor manufacturing industry. It's all too easy to imagine government-dependent chip makers demanding yet more handouts a decade down the line. Congress can head off this threat with some pro-competitive reforms, including expanding free trade deals and scrapping tariffs. Beyond that, lawmakers must be mindful about how all this new cash is being spent and ensure that a one-time splurge doesn't turn into a permanent subsidy. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Oh my goodness, we're already there. We got 9 minutes to go to the end of trading. The Dow is the clear laggard right now, down by more than 1%, being pulled down by Caterpillar. But we got a lot to talk about, not just the Dow or the S&P or the NASDAQ or today, but really the big picture right now. We had a great guest with us to do that for our Drive to the Close segment. Abhay Deshpande is the founder and CIO at Centerstone Investors. Abhay joining us once again on the phone from New York City. Abhay, it's been a few months. How are you?
Hi, it has been a few months.
Yeah, it's good to have you with us. Okay, I want to talk about some of your picks. We'll do that in just a second. Love hearing, what you got your eye on. But first, I want to get your thoughts on where we are in the market cycle. Is the bottom in?
I don't know, it's completely dependent on whether or not there's going to be a recession or like a real recession with unemployment spiking and all that stuff. I don't think we really know yet. There's this in-between period. So my thoughts are that for the most part, other than like a financial crisis, we have rolling recessions in this country that affect certain parts of the economy. And interest rates having done what they have done clearly introduces the threat of a recession, in housing related and high ticket capital goods type areas. But that doesn't necessarily mean a consumer recession, and consumer drives most of the economy. So I'm of two minds. One, we could have a recession of part of the economy and maybe not in another more significant part of the economy. And that allows for the stock market to we went down 25%. That's kind of enough.
So when you say recession in part of the economy, do you mean, what are you referring to? I mean, are you referring to manufacturing or retail? I mean, because the consumer, we're learning some interesting stuff from companies right now.
Yeah, I mean, some of those interesting things are that there's been no impact on companies. So,
unless you're at the lower end, right? Like with a Target or a Walmart.
Yeah, and even then, that's mostly them trying to cycle through. Everybody last quarter of last year just double ordered a bunch of stuff because of the shipping delays and all that. Now they've had to discount that. That's not because demand has fallen off a cliff. It's because they got to move product out of their stores, perishable products sometimes. I mean, that you clearly have a lot of, stressors in the economy, with prices having risen and food, shortages around the world, creating an impact even here in the United States. Oil prices and fuel prices having gone up. But you don't quite see the impact on the ground yet, outside of housing, which is where you'd expect. Mortgage rates have gone up as much as they
So how do you hedge it?
I think you hedge it the way, for us, the answer has always been to be diversified. That means across the world, not to be targeted specifically at, tech stocks or what have you, or even just value stocks. We're value investors, so our preference is to find securities that trade at discounts to their intrinsic value. But there are, looking at our portfolio, which we at Centerstone, we build it from the bottom up, there are some interesting themes that are developing,
So walk us through them.
Well, one is that we own a company called Grainger. It's industrial parts distribution, or I guess it feeds industrial plants and whatnot with parts that they need for producing, anything from cars to windows. And their business is really humming. And there's something to be said about a longer term trend of onshoring of the supply chain back into North America, United States and Canada. And so companies like that may
Let me ask, how, you said you own it. When did you get in?
Many years ago.
I'm just looking at the stock chart, and wow, this is quite the stock chart. Folks, actually
Ticker
saw
GWW.
GWW, and it is actually a massive acceleration from the bottom of 2020. It's actually at a record high in stock price right now. Shares are at $539. Are you not concerned it's too expensive?
I mean, it depends on what kind of business you think this is. If you think it's a cyclical company that will just go up and down with the industrial cycle, then maybe it's on the higher end of its valuation. If you think there's wind in the sails because of a longer term growth factor that was not here before, it's been absent for a long time, which is the reshoring of supply chains, then possibly you have more of a franchise element to this, which would mean that this is not especially overvalued.
What camp are you in?
The evidence points to that there being a lot of wind in their sails. If you just look at the current numbers, you'd think that they'd start to talk about slowing demand and all that. That's not happening. They're talking about accelerating demand.
All right, Abe, we talked Grainger. Let's talk CSL, Carlisle Companies Incorporated. What's going on there?
That's enough. Yes, it's sort of the same theme. You'd think that at some point, oil prices going up, you'd think that demand and pricing for them would kind of contract a little bit, but they to just put it real basic, they make roofs, for warehouses and factories and that kind of thing, big, huge roofs. And, as manufacturing is starting to head back into this country again, I think there's more demand. There was clearly some just pent-up demand from, the world being shut down for a few months, for a year or two. So there is some catch-up, but there seems to be some additional wind in their sails too. And that stocks are also kind of reflected that. It's not reflecting a concern that that it's a cyclical stock and things should revert to the mean, so to speak. It seems like the market suggests that there's longer-term growth.
Yeah, really interesting to look at these two charts compared with one another. They kind of have similar trends with their movements recently, Kriti.
Yeah, they really do. And I the reason I pushed on, are these too expensive is because a lot of people are saying, well, active picking, active investing, that's the way to go here.
All right, Abe, we got 30 seconds left with you. Give us your theme on when it comes to emerging Asia tourism.
Emerging, this is again kind of construction from the bottom up. We keep on finding a bunch of stocks that are looking very low priced compared to their prospects, and the prospects are accelerating rapidly. So companies like Naga Corp, this is like a small random company, but Naga Corp in Cambodia, Genting in Malaysia, which are casino operators. If you're like my benchmark for tourism is Bali. What's going on in the island of Bali? And they're about 25%. Tourism was in May about 25% of COVID pre-COVID peak, and now, from reports I see it's just completely full. So.
All right, Abe, we unfortunately have to leave it there. We're out of time, but you got to come back. Abe Deshpande, founder and CIO at Centerstone Investors. We go now to our Bloomberg TV team for our cross-platform coverage of Beyond the Bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld, counting you down to the closing bell. And here to help take us beyond that bell is our global simulcast. Tim Stenovic, Kriti Gupta is in for Carol Massa, and we bring together TV, radio, YouTube audiences to look at a market that is sort of selling off into this close, Tim. We're off by 0.6% on the S&P and actually down across the board, really.
Yeah, kind of a choppy day of trading. We just had a really interesting conversation with Abhay Deshpande over at Centerstone Investors. He's the founder and CIO there. We took a big picture approach with him, and he actually said that he doesn't really know if there's going to be a recession at this point. He kept pointing to the strength of the consumer because you haven't yet seen the impact on the ground apart from housing, he said. You're hearing from these companies week after week that the consumer is still in a good place despite all the stressors that we're seeing on the economy.
And of course, that's going to be an ongoing question. And I think we've asked every guest here, is the bottom in? And no one has a really clear answer.
They can't see the future in the crystal ball?
They can't, but I guess that's what makes markets fun. But take a look at today's trading day. As you look at the S&P 500 inching closer to those session lows, well, the Bloomberg Dollar Index, it's at session highs.
The yields as well, hovering near session highs. I think a big reversal that we saw mid-morning or so, Katie. And I think for me, the story has been, despite the volatility, you've nailed it on the MOVE index versus the VIX index. But this actually isn't one of the most volatile yield days that we've seen this year. Really has been the front end of the curve, of which we know the Federal Reserve controls, that is really seeing a majority of the movement this year.
Oh, big time. And it feels like, I mean, to your point, the size and scopes, they're not even that big. Really speaks to just what a year it's been chasing these Fed expectations.
Yeah, it ended up being initial worry about Taiwan, moving into focus about the worry of, well, the Federal Reserve, what the Fed presidents were saying, Mary Daly saying, we are not done yet in our fight against inflation, and perhaps we price in a more hawkish Fed. The stocks go lower by the tune of 0.6%, almost 0.7% for the S&P 500, 27 points lower as we see settlement just coming into play. The NASDAQ off by almost 0.2%, 20 points lower for big tech, which had managed to be in the green for most of the trading day. Volumes elevated, the Dow off by more than 1.2%, 401 points lower. And let's bring it out to see what the Russell 2000 did, because it had managed to be outperforming throughout the trading day, and it too managed to just sink into the red by less than 0.1% overall. Taylor and Tim.
Yeah, I mean, I know we get a hard time for focusing on the Dow, but with a decline like this, the real underperformer really points to the weight that Caterpillar, Boeing, and Intel have. Between those three companies, we got over 100 points of the decline today.
And Tim, you really see on the sector level as well, the tilt to the downside. Take a look at where we are. There's actually, for the radio audience, only 4 sectors, a few levels down within the S&P 500 that managed to close in the green. It's autos, hardware, equipment, and some media and entertainment. The semiconductors, that feels pretty risk on, except that everything else is in the red. And again, for the radio audience, we go down and it feels a little bit defensive here. You have some of the dividend financials, some of the real estate, the banks, of course, as we were looking at yields rising, but again, still a further inversion of that yield curve, Kriti, which has maybe some concerns for the future of the economy.
Absolutely. And I think this is where you start to see the disconnects, the cross-asset disconnects, where you do have this bond story that is really this inversion. It's pricing in a recession. It's treating off of the names. When you look at the equity market, and there is clearly a defensive bid to be had. I mean, just take a look at some of the gainers here today. NVIDIA, for example, NVDA is your ticker, and it ended up higher on the day. Once again, if you are concerned about the geopolitics, if you're concerned about the chips, it actually closed about, we're looking at up 0.5%. You buy the trade, you buy what's everyone's going to want. Lockheed Martin is going to be another major story. You also have defense stocks as well, Katie.
Got to jump in and talk about some breaking news that we get. Of course, MicroStrategy reporting earnings, but the big news is that Michael Saylor will assume executive chair role, not CEO anymore, stepping down. Feng Li will serve as new CEO. That, of course, is big news when we think about what a big corporate backer of Bitcoin, Michael Saylor, has been really sticking to his guns. Looks like he is still, of course, involved with the company. He's the executive chair, but a big, big leadership change over at MicroStrategy. MicroStrategy shares sinking now, down almost 5%.
We go from MicroStrategy to Airbnb. A few of the headlines trickle out, and you get second quarter in the middle of that income statement, adjusted EBITDA. An outperformer, $711 million. The expectations from the street had been about $591.7 million. We also take a look at the second quarter nights and experiences booked. maybe about here, right in line, 103.7 million versus estimates of 106 million. The big headline, though, that they are going to be buying back $2 billion in Class A common stock. And again, the forward guidance that looks pretty good. Third quarter revenue, $2.78 to $2.88 billion, ahead of estimates, which again, Caroline had been for $2.78 billion. So better than expected guidance and big sort of share buybacks. The stock market in the after hours tries to digest what that means.
Kind of extraordinary that it's lower, considering you're getting such a significant amount of buyback on the stock. So more than almost 2% point lower on the Airbnb. We'll dig into the income statement as to why. Interesting, we go back to what's happening with MicroStrategy. Of course, kind of a pin-up Bitcoin stock and crypto stock, down by almost 5%, as the biggest proponent of crypto out there, being one Michael Saylor, is going to take a more of an elevated role as the chairman, no longer as CEO, and his focus, shock horror, is going to be on the purchase of crypto. He's saying that Saylor will focus more on Bitcoin acquisition. Remember, this is sort of a software company that basically pivoted to become an ETF tracking Bitcoin.
Yeah, I was going to say, I mean, at this point, Caroline, MicroStrategy is a bet on Bitcoin.
Yeah.
It's really hard to slice it any other way. And I'm wondering, Katie, because you've interviewed Michael Saylor in the past, what explains perhaps this, this leadership move? Because this is one that certainly wasn't announced before.
I mean, obviously, we'll have to hear it from the horse's mouth why exactly MicroStrategy is doing it. Interesting that he will be focusing on Bitcoin acquisition. That sort of speaks to their ambition to potentially buy more Bitcoin. We know that under Saylor, MicroStrategy has bought about $4 billion worth. Of course, that stake has lost more than $3 billion. Maybe the company is refocusing a little bit more on its actual business, which is a software company.
We continue to look at software companies, and the delicate dance that we do here between MicroStrategy and Airbnb is we await some other big earnings that come. And I think, Caroline, for me, sort of these further share buybacks that go ahead with breaking.
Starbucks just coming out as well. And I think you talk about share buybacks, you also talk about companies that, Airbnb had exposure to China. We're seeing Starbucks coming in with its like-for-like sales, missing expectations, a gain of 3% in the third quarter. The market wanted to see 4.26%. North America in line, up 9%. International like-for-like sales, though worse, down 18%. The estimate had been for a 16% drop. And overall, Chinese sales falling 44%. We shouldn't be surprised given the lockdowns over COVID, but still the estimate had been for a 39% drop. And we're seeing net revenue come in at $8.15 billion, which is basically in line. It's an adjusted earnings per share.
We're digesting all of these, Caroline. I want to get a little bit more insight into Airbnb and want to bring in Mandeep Singh. Of course, you know him as our senior technology analyst here for Bloomberg Intelligence. And Mandeep, for us, in terms of the fundamentals, it's a big share buyback. But what do you also make of the numbers? And now looking at some of the strongest numbers yet here, but the market not maybe reacting to that.
Well, you have to keep in mind the estimates for Airbnb actually went up, coming into the quarter. They were up by almost 10%. So travel was supposed to, be a nice tailwind. It reflects in the results, but it doesn't show up as much in the upside. And I think what they're trying to do here is probably boost more supply in the anticipation that travel demand remains robust. But, at the end of the day, a marketplace is all about, how much can you boost supply and whether customers can take that price increases. So they were a little short on the room nights. That's where I think they probably missed expectations. But overall, I think this is a terrific quarter, and profitability looks great, actually.
Now, Mandeep, tell us.
Tim, can I just break in for a second? Because we do have some breaking news coming out of Robinhood. And it's a significant news in terms of reducing headcount by some 23%. Wow. This is coming as a statement coming from the CEO and co-founder Vlad Tenev. And remember, this is a company we're expecting to have earnings of later in the week, but they are saying that they're cutting headcount to the tune of 23%. This is once again a company that has been under pressure, trying to scale back, maybe having beefed up too much during the COVID period where everyone was sat at home and trading stocks like MicroStrategy, which we just had news on, and Airbnb. And so it is notable, Katie, I think that we do have this reduction in headcount.
Absolutely, and you're seeing that reflected in the shares after hours, down by about 2%, but really jumping around. Of course, this is a stock that's already down 48% so far this year, Tim.
Okay, I want to go back to Mandeep Singh covering Airbnb because he's had a little bit more time to jump into that earnings report from the company. You called it a pretty much terrific quarter, Mandeep. When you were on radio with us just a little while ago, you mentioned looking at parts of the report to give you an idea of the strength of the consumer and to what extent the consumer is actually willing to pay up for experiences such as the ones that Airbnb offers. What can you tell us about the strength of the consumer in this report?
Yeah, so I think Airbnb's clear trend was long duration nights. They were doing very well, and that doesn't seem to be the case this quarter. So clearly, ADRs continue to go higher, which is a function of supply and demand, but room nights fell a little short. And I think even though they beat on the quarter, room nights is the ultimate kind of metric when it comes to gauging, the consumer demand elasticity. And I think overall you do see pricing having an impact in terms of the overall total room night growth.
Mandeep Singh, really appreciate it despite the whiplash. Our senior technology analyst here for Bloomberg Intelligence. Tim, I think we say goodbye.
All right, AMD shares down 5% after third quarter sales forecast lagging at midpoint. We got much more to do when it comes to earnings. We'll continue the coverage in just a few minutes. In the meantime, we'll see you tomorrow, same time, same place for our Beyond the Bell coverage.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Kriti Gupta live in the Interactive Brokers studio. Wow, a lot of whiplash today with earnings. Let's get to Washington, D.C., where Nancy Lyons is standing by with world and national news. Hey, Nance.
Thanks, Tim. China may not be happy with Speaker Nancy Pelosi's trip to Taiwan, but she is receiving support from both sides of the aisle here at home.
China announced military drills later this week in the vicinity of Taiwan. Political analyst Greg Valliere of AGF Investments commented in a Bloomberg interview.
This is a strong argument for even more defense spending. Congress already has far exceeded what Joe Biden has asked for. I think Congress will spend even more. There's two fronts. There's Ukraine, there's China, and when it comes to the South China Sea, I think the U.S. needs more shipbuilding.
24 Republican senators, including Mitch McConnell and his leadership team, issued a statement endorsing the Pelosi-Taiwan visit. In Washington, Irv Chapman, Bloomberg Radio.
The Biden administration is winning points for taking down al-Qaeda leader Ayman al-Zawahiri. Retired Brigadier General Mark Kimmett tells Bloomberg he's impressed.
Militarily, I think it was executed flawlessly, both in the intelligence preparation of the target and the targeting and execution of the drone strike.
Again, retired General Mark Kimmett. Senate Majority Leader Chuck Schumer hopes to get a big veterans aid bill passed within hours. It would help those who've been exposed to toxic burn pits.
We expect to have an agreement, amendments, start voting at 5, and I believe it will pass this evening.
Schumer says Republicans appear to be on board, even though they previously blocked the measure to protest the new Democratic economic package. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Kriti Gupta were live in the Bloomberg Interactive Brokers studio here in New York. We got a slew of earnings after the bell, including Starbucks, AMD, Airbnb, plus MicroStrategy, in the news that Michael Saylor is stepping down as CEO of the company. We got Robinhood saying that it's going to reduce headcount by 23%. Kriti, where do you want to start?
I think the chip story is fascinating. It has everything to do with today. Advanced Micro Devices, their revenue $6.5 billion to $6.9 billion. The estimate was $6.8 billion, but ultimately the shares are falling to the tune of about 5% after lagging at that midpoint. Remember, it's all about margins. It's all about where that production capacity is going to come from. And remember, we are dealing with some major geopolitical tensions that directly affects the likes of AMD.
All right, I'm going to go over to Robinhood. Shares in the after hours right now are down about 1.8%. The company is saying just minutes ago that it's reducing headcount by 23%. The company is saying that employees from all functions will be impacted. The company also saying that departing employees will be offered employment through October 1st. The company said it's seen a deterioration of macro environment. Customer trading activity and assets under custody have been reduced. I mean, look, it's been the decline of the meme stock, right?
The decline of the meme stock, but also I believe 60% of the revenue comes from crypto. Look at what has been happening on crypto. It has been taken to the watershed.
It has,
literally.
except for July was a great month.
It was, except I think because of the original pain, you had less and less people say,
completely agree.
I want to touch this.
Yeah, that's a really good point. Before we go, let's check in on shares of Airbnb in the after hours. Shares right now are moving down about 5.4%. The company is saying in a statement, in its earnings statement, that it's going to do share buyback of up to $2 billion of its Class A common stock. Third quarter revenue coming in just about at estimates, the company, its outlook, I should say, $2.78 billion to $2.88 billion. Investors, though, in the after hours, sending shares lower.
Look, why when you have a buyback announcement? That never happens. So this is something I want to see if it gets a bid tomorrow morning.
All right, we'll spend a little more time digging into these results. All that and more coming up over the last hour of Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Tons of earnings after the bell. We've got you covered. PayPal Holdings is authorizing a new $15 billion share buyback plan. That headline crossing the Bloomberg Professional Service right now. PayPal also naming Blake Jorgensen as Chief Financial Officer. Airbnb said revenue in the current quarter is going to be the highest in its history, allowing the home rental company to start a $2 billion share repurchase program. But after hours, Airbnb shares, they are down now by roughly 5%. AMD, the second biggest maker of computer processors, delivered a lukewarm forecast for the third quarter. AMD down now by about 4%. Starbucks profit beat estimates, but sales show slowing traffic. Shares perking up after hours. Starbucks up now by just about 1%. And Electronic Arts gave a forecast for revenue in the current quarter that did fall short of analyst estimates. The EA shares trading lower now, trading little changed after hours. So lots of earnings. Turned out to be a down day. A lot of the selling intensifying in the final 15 minutes of trading today. The Dow, the S&P, and NASDAQ all declining with a drop of 0.7% for the S&P. The Dow was down 1.2%, down 402 points. NASDAQ down 20, a drop there of 0.2%. Certainly comments from Federal Reserve officials. Also Nancy Pelosi's trip to Taiwan, that also weighing on sentiment today. 10-year yield 2.75%. Spot gold down 0.6%, 17.62 the ounce. And West Texas Intermediate crude up today by 0.4%. WTI 94.24 a barrel. Briefly, Robinhood cutting 23% of its workforce in a sweeping reorganization. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, cancer is, according to the World Health Organization, one of the leading causes of deaths around the world. It accounts for nearly 10 million deaths a year. That was as of 2020. So early detection is certainly key. And last year, Providence became the first health system to bring in the cancer screening test Galleri. This is a blood test that can provide early detection of cancers. To talk more about this, we've got Ora Gordon joining us, Regional Medical Director for Providence Center for Clinical Genetics and Genomics, joining us from Burbank, California. Dr. Gordon, how are you?
Hi, good afternoon. I'm wonderful. Thank you.
Well, it's good to have you with us. I got to tell you, before researching this, I'd never heard of the Galleri test. Can you tell us what it is and how we can learn more about potentially life-altering diseases as a result of it?
Absolutely. So the Galleri test is based on something called cell-free DNA, and it's a blood test. If you think about COVID or the way we test for other infections that we've long been able to sequence to figure out what the genetic information is for something that's foreign in our body. So this first entered into clinical use about 10 years ago with the ability to detect DNA from a baby when a woman was pregnant to see whether or not the baby had problems like chromosome abnormalities, Down syndrome, those sorts of things. Well, what had happened was, and that has taken off and is now current standard of care as a non-invasive way to detect prenatal assessments of babies' health. But in a few rare cases, there was DNA taken from the blood test in the mother that was neither the baby's nor the mom's. And what turned out was that that was DNA from a cancer, and those were mutated DNA strands. And this became the beginning of this, extraordinary journey for what is the holy grail of trying to detect cancer without any symptoms or signs.
Wow.
And so, yeah.
Jump on in, Kriti, because I know you had a question.
Yeah, so this is still very early stages. Walk us through the timeline here of how we're still progressing.
Absolutely. So there's been a lot of R&D and AI that's gone into studies that say, okay, fine, we found this signal. Now, and I'm not part of the company. I'm part of a clinical study that is really looking at the utility of a test like this. So the test can detect not only is there cancer present, but then be able to differentiate 50 different types of cancer within this one blood test. Anything from colon to pancreas to ovary or to blood cancer. So this is transformative, potentially. Now, what we need to know is, can we actually bend the curve? Can we find cancer earlier when it is curable and not, the devastating late-stage disease that we hear about all the time in the news? And how does this change from an economic standpoint in terms of the care for our patients and the ability to save lives?
We'll talk about early detection here because you mentioned a few cancers that I think to a lot of our audience would be recognized as essentially having really low rates of survival. Pancreatic cancer, for example, some blood cancers that tend to kill when you're diagnosed with them.
Right. So, when you think about cancer and you think about screening in the U.S., for example, there are 5 cancers that we have guidelines-based recommendations for: breast, colon, cervical. If you've been a smoker, then lung cancer, and then there's dialogue around, who should have prostate cancer screening. 70% of all cancers, though, are not part of any of those that we routinely screen for. So we have tried in earnest to try to figure out how do we detect cancers that people may be harboring or at risk for. I'm a medical geneticist, an internist, and so my entire career is devoted to identifying those patients who are at high risk and doing everything I can for prevention and early detection. That's why I was so invested, and that's why Providence as a health system is so committed to early delivery of a test like this, to be able to say, who is the most important patient that needs this kind of test? How do we help broaden the ability to detect cancer in those who may be at elevated risk because they have a family history, because they carry a genetic mutation, because they've had a prior history of cancer, and how do we take care of them differently?
Yeah, we've got about 30 seconds here. Why don't you answer that? How do we move forward?
So what we're doing is a 5,000-person study. People are in various different groups, depending on whether they have a genetic risk, whether they have a personal history that puts them at higher risk. And we're offering them at no charge blood tests, this Gallery test, with a return of results, and then following them forward, saying, what happens when that test is positive? How do we screen them going forward? Do we find cancers that we expected? Do we find them earlier stage? Can we change the course of their disease? And all this is part of a national outcome study called Reflection, and we are significantly contributing to that to try to figure out if this is going to be the next thing that we start offering everybody on an annual basis once we have the kind of outcome data that we need to really understand who it's best for and how best to use it.
Dr. Aura Gordon, Regional Medical Director at Providence Center for Clinical Genetics and Genomics, joining us from Burbank, California, talking all about the new Gallery test that they've been doing for about a year. Dr. Gordon, thank you so much for taking the time. Really appreciate it. Briefly checking in on shares of PayPal, higher right now by 10.5%, moving higher in the after hours after the company announces a new $15 billion share buyback plan and a new CFO as well.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week, and we promised at the top of the show that geopolitics front and center today. We're going to continue our conversation about Taiwan, Nancy Pelosi's trip there. We'll do that in just a few minutes, and of course, the reaction from China as well. First, though, Charlie Pellet, we got so much news happening in the after hours. I don't even know where to begin.
We love it because that's what we do here at Bloomberg. We got you covered. We got your back. Let us begin with Airbnb, saying revenue in the current quarter is going to be the highest in its history, allowing the home rental company to start a $2 billion share repurchase program. Right now, though, shares after hours, they are tumbling by roughly 5%. Mandeep Singh is a senior analyst with Bloomberg Intelligence.
You know, at the end of the day, a marketplace is all about, how much can you boost supply and whether customers can take that price increases. So they were a little short on the room nights. That's where I think they probably missed expectations. But overall, I think this is a terrific quarter and profitability looks great.
And again, after hours, we do have Airbnb shares dropping now by 4.9%. AMD, the second biggest maker of computer processors, delivered a lukewarm forecast for the third quarter, indicating that market share gains against Intel will not offset a steep decline in demand for PCs. After hours, we've got AMD down by roughly 4%. MicroStrategy also making news. It says co-founder Michael Saylor will no longer serve as CEO and will assume the new role of executive chairman, as the enterprise software maker reported a second quarter loss of about $1 billion after taking $917.8 million impairment charges relating to the decline in the value of Bitcoin that it holds. Turned out to be a down day on Wall Street today. Federal Reserve decisions, Federal Reserve concerns and speakers today, that's certainly weighing on investors. Also, Nancy Pelosi's trip to Taiwan, that too weighing on sentiment. S&P down 27 points today, a drop of 0.7%. The Dow down 402, a decline of 1.2%. Nasdaq down 20, a drop there of 0.2%. The 10-year yield 2.74%. Spot gold down 0.5%. 17.62 the ounce. West Texas Intermediate crude oil, little change now, up 4 cents, 93.93 a barrel. Recapping, down day on Wall Street. S&P falling by 27 points, down 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's check back in on what's happening in Taiwan. Geopolitics front and center after House Speaker Nancy Pelosi landing there, becoming the highest-ranking American official to visit the island in 25 years. China saying that it will conduct missile tests and military drills around the island. Joining us now is my colleague from Bloomberg Quick Take, Scarlett Fu. She's with us right now in the Bloomberg Interactive Brokers studio. Scarlett, eager to have you on. You know, you lived and worked in Hong Kong for 8 years, but you've also got a bit of a personal history in the region. So before we get into talking about Taiwan, I want to hear more about your story.
Yeah, I used to visit Taiwan regularly. I would go every other summer because my grandparents lived there. My parents grew up in Taiwan. They were born in China, but they fled to Taiwan with the nationalist government, grew up in Taiwan, and we would go back and visit family regularly. So I really was able to see Taiwan evolve and develop from a society that lived under martial law to a society that was holding free elections.
Well, make the transition for us from what you understand about Taiwan and your experience there, and why it's become so important in geopolitics today. After all, it's a tiny piece of land.
Yeah, you and I were talking about how geographically the main island of Taiwan is approximately the size of what I like to call Red Sox Nation, which is Massachusetts, Rhode Island, and Connecticut. But Taiwan also claims sovereignty over a bunch of other islands. And it's not the only one. There's a bunch of other countries that claim sovereignty over these islands too. So there's a lot of disputed territory. You've got countries like China, Japan, Malaysia, Vietnam, the Philippines, all claiming some sovereignty over some of those islands.
So what's so important about it? Why do we care about this particular location?
Well, Taiwan, I mean, in real estate, it's location, location, location.
Yeah.
And that's kind of the case here because Taiwan is about 100 miles off of China's southeastern coast. And if you were to look at it on a map, it is the biggest landmass between Japan and the Philippines. So it's in this crucial position. And so the U.S. and every other country in the Asia-Pacific region sees Taiwan as crucial to containing China and its military ambitions and economic ambitions. That's just strategically. Then you've got, of course, the economics. You guys talk about it all the time, the chip industry. The world is completely dependent on Taiwan semiconductors. The island is responsible for about 92% of the world's most advanced chips. These are the chips that power your smartphone, your car, the AI in your smartphone, the AI in your car. So it makes the world go round right now.
So, Scar, we were talking with Ian Marlowe a little earlier for Bloomberg Government, and he wrote a story about the flight path of Nancy Pelosi's plane.
Yeah, that was fascinating.
It was fascinating, right? Avoiding the South China Sea very clearly. I mean, flying around it in a way that, you know, was kind of reminiscent of you know, countries making sure they avoid Russia and Ukraine during wartime. So talk to us a little bit about China's relationship with Taiwan and where it stands right now.
It's really, really complicated is the short answer. It's really actually quite convoluted as well, because if you go back to recent history, Japan had to give up Taiwan to China after losing World War II, but there was a civil war in China, so the nationalist government that was in China was defeated by the Communist Party. They fled the mainland and set up shop in Taiwan. They were supported by the US government, which recognized the Nationalist Party as the rightful government, but temporarily displaced government of China. And then everything switched when the US decided to change sides and recognize the communist government in Beijing instead. So in doing so, it recognized that Beijing is the seat of government for China. There's only one China, and it is the government in Beijing. And China has a one China policy. The US agrees with that. Taiwan is part of China. The US agrees with that. But at the same time, it hasn't really clarified what it would do if China were to take Taiwan. And taking Taiwan by force, taking Taiwan by welcoming it back, not clear. There's a lot of intentional ambiguity when it comes to Taiwan and where it fits in with the one China policy when it comes to how the US is going to act on anything.
So why all the, I want to say chaos when it comes to the foreign policy here? Because if you said, like you said, it's a one China policy, then why support Taiwan? Why is this such a big deal?
Well, the U.S. has pledged to support Taiwan, and it also sells some military equipment to Taiwan as well. And it's very much supported Taiwan in many ways, but China sees that as a threat because China regards Taiwan as a domestic issue. If Taiwan is part of China, this is a domestic issue. The U.S. has no role or no say in any of this.
30 seconds left, Scarlett. What about the identities of the people in Taiwan and how they identify?
That's a great question. As time goes by, more and more people see themselves as Taiwanese as opposed to Chinese. Ethnically, more than 90% of the people in Taiwan can trace their roots to the mainland, but as time goes by, that tie to the mainland really is more and more distant, and they start culturally and politically seeing themselves as Taiwanese.
Really, really awesome to speak with you. Scarlett Fu, my colleague from Bloomberg Quick Take, and this is why I love the Bloomberg newsroom. I mean, you've got people from all over who've lived and worked in Asia for 8 years, Scarlett being one of those. And they come back and they share their experience with us. Scarlett Fu from Bloomberg Quick Take. Really appreciate you taking the time, Scar. Let's get to Washington, D.C. now for World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. You've been talking about it. House Speaker Nancy Pelosi did decide to go to Taiwan. She arrived today and will meet with leaders tomorrow. Pelosi bucked Beijing's warnings about her visit, and now she has a surprising supporter in her corner. Senate Minority Leader Mitch McConnell.
I think it's important that the Speaker did go to Taiwan. I don't think the Chinese get to tell members of Congress where they can go.
Senator McConnell says the Chinese want to do to Taiwan exactly what they did to Hong Kong. Shortly after Pelosi arrived today, China announced military drills surrounding the island will begin Thursday after Pelosi has left. The U.S. Department of Justice is taking the state of Idaho to court over its refusal to provide medically necessary abortions at certain hospitals. Attorney General Merrick Garland calls that a violation of the Emergency Medical Treatment and Labor Act.
If a patient comes into the emergency room with a medical emergency, jeopardizing the patient's life or health, the hospital must provide the treatment necessary to stabilize that patient. This includes abortion when that is the necessary treatment.
Garland says Idaho's law criminalizes all abortions and subjects anyone who performs one to up to 5 years in prison. Senator Joe Manchin says he is working to advance his Inflation Reduction Act. Today he met with potential holdout Senator Kyrsten Sinema. He says they had a nice talk, but he would not say whether she'll support the bill. She's expressed concerns about raising taxes. Manchin says his bill does not raise taxes, but does close loopholes. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that update, Nancy Lyons. Tim Stenovic and Kriti Gupta were live in the Bloomberg Interactive Brokers studio. We're watching Robinhood very closely. The company down about 1% in the after hours right now. This after Robinhood cut almost a quarter of its workforce in a broad reorganization after a punishing first year as a public company.
Yeah, this, of course, follows an earlier round of cuts in April when Robinhood eliminated about 9% of its staff. And that follows a pandemic trading boom that fueled the firm's drive to an IPO in July of 2021. But since then, business has slumped and monthly active users on its app are declining sharply.
Yeah, the company also saying that it also giving us results a day ahead of schedule. The company said its net loss for the period was $295 million, or 34 cents a share. Shares of Robinhood have lost about 3/4 of their value since the firm's IPO last July. What a difference a year makes, Kriti. Little change, though, in extended trading as of this afternoon.
Yeah, a lot of people digesting what this actually means in light of the company-wide reorganization in which the company will transition to a model where, quote, general managers take broad responsibility for parts of the businesses to get rid of hierarchies. That, according to Vlad Tenev, he's 35 years old and said that in a statement.
Okay, so let's go through some more of the details that we learned in the after hours here. These job cuts involving about 780 employees. The company did say that crypto revenue came in above estimates at $58 million versus estimates of $55.4 million. Monthly active users, though, coming in below estimates, 14 million. Estimates were for 15.5 million. The company also gave an update to its assets under custody, $64.2 billion, and gave an update for net interest revenue coming in above estimates at 74 million versus estimates of 67.2 million. The company did see operating expenses at about $1.7 billion to $1.76 billion. Kriti, I think you made a good point earlier about the decline in crypto affecting the company. I would also say, the company calling out macroeconomic headwinds and the idea of higher inflation, people might have less money to actually play around with on Robinhood, and that affecting the company as well. Much more to come on this and more on Bloomberg Business Week.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. We're keeping an eye on PayPal. That stock jumping 11% after saying it expects to record $900 million in savings this year from cost cutting, which have included laying off workers and shuttering offices. The company also announced that activist investor Elliott Investment Management is now one of its largest shareholders. Again, after hours, PayPal investors bidding up that stock, up now by just about 11%. Airbnb down almost 9% after the company missed estimates on bookings, highlighting investors and analysts' high expectations for companies in the travel sector as the end of pandemic restrictions fuel demand for trips and stays away from home. And one more to tell you about Starbucks. It reported after the bell, shares higher, little changed in light trading, up by about 0.2% after a strong U.S. performance and higher prices helped to offset lower traffic and sluggishness in China amid anti-COVID measures. It turned out to be a down day, a lot of selling in the final 15 minutes of trading today. Treasuries sank, stocks dropped after Fed officials signaled the central bank is still intent on raising rates until inflation is under control. S&P down 27, a drop of 0.7%. The Dow today lower by 1.3%, down 402 points. A Nasdaq slumped 20, a drop there of 0.2%. 10-year yield 2.74%. Spot gold down 0.5%, 17.62 the ounce, while West Texas Intermediate crude was down 0.2%, 93.73 a barrel. So a down day on Wall Street. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, fires burning across Europe and right now in California. Catastrophic flooding in Kentucky. Unprecedented heat wave in the UK. These are just a sample of the extreme weather that we've covered here in recent weeks. The big picture, though, is our planet is at stake. We've got a great voice on this. He writes a column each week for The Guardian. He's written quite a few books, including Heat, How We Can Stop the Planet from Burning. And his newest is Regenesis, Feeding the World Without Devouring the Planet. George Monbiot is joining us now. He's a columnist at The Guardian, joining us via Zoom this afternoon. George, it's really good to have you with us. How are you?
Thanks, Tim. Yeah, doing all right, despite the state of the planet.
Yeah, well, that's what I want to talk to you about, because this new book that you wrote is all about environmental destruction that we don't necessarily talk about a lot. It's not about the fossil fuels that go into the atmosphere as a result of us commuting. It's not about poisoning rivers, with chemicals as a result of manufacturing. It's about how we survive, how we eat. Talk to us about that.
Yeah, so the food industry, we don't really want to go there. We much prefer to criticize fossil fuels, but actually, I'm sorry to say that the most destructive industry on Earth is farming. It's the biggest cause of habitat destruction, the biggest cause of species loss, of extinction, of land use, of water use, of soil erosion, one of the biggest causes of water pollution, of air pollution, and one of the biggest causes of climate breakdown. Now, obviously, we need farming and we need to eat, but we need a long, hard, and realistic conversation about the devastating effects that the way we farm is having on the living planet on which we also depend.
Well, I guess this is where I'm curious about the government here, because in the United States, I believe most of farming is subsidized by the U.S. government. So what is their role in all of this?
Thanks, Trudy. Well, worldwide, governments are spending $500 billion on farm subsidies. Wow. $500 billion. And almost all those subsidies are destructive environmentally. They are subsidizing damaging practices. Now, we could radically repurpose those subsidies and pay farmers to be protecting the planet, and in some places to stop farming, because there's certain kinds of farming, and I'm afraid the kinds of farming which there's a lot of sort of myths and warmth towards, which has extensive livestock farming, ranching in other words, which are peculiarly damaging. I mean, they exert a far greater impact than the amount of food they produce warrant. And so to be paying farmers to get out of that farming altogether and to restore the land instead, that would make a really massive contribution towards protecting our life support systems.
George, let's continue with solutions here. And I want to talk about this on a governmental level, but also on a personal level. And I always want to know, when I talk to people like you who put so much work into writing a book like this and all the work that you've done over your career, personal steps that we can take when we're in the supermarket, when we're buying food. What should we be doing at the personal level?
Well, the first thing to say is that we're much more effective as citizens than we are as consumers. And a lot of the changes which need to take place are political. But we also do have power in our choices. And one of those, when it comes to food, the biggest change we can make of all is to switch away from eating meat and milk and eggs, animal products, towards a plant-based diet. And I know that doesn't play very well in the United States, but I'm not in the business of telling people what they want to hear. I'm in the business of retailing.
And just so I understand, completely eradicate meat, all meat.
That would be the best thing you can possibly do for the living world.
It's a big ask.
Not for everybody. I mean, there are a lot of people who. And
I mean, don't get me wrong, I'm a vegetarian, but for a lot of people.
Exactly.
Yeah.
Yeah.
Well, let's start there then. How much of a case do you think you'd have to make for people to get on board to actually care about the destruction, the environmental destruction, at a time, by the way, when food scarcity is a major issue and food prices are, I think, at record highs?
It is, and one of the reasons for that is that a great deal of the food that we produce goes to feeding animals rather than feeding humans, and that's actually a really inefficient way of feeding us, because a lot of that food value is lost when it passes through the animal. So that is actually another very powerful reason to be moving towards a plant-based diet. You know, we can't afford it, either as human beings or as far as the rest of the living world is concerned. We can't afford to keep eating these animal-heavy diets. And now, actually, we have some very good substitutes coming forward, not least in the shape of this precision fermentation. It's basically an enhanced form of brewing, and it produces protein-rich and fat-rich foods. It'll soon be very cheaply, and they'll be much better than a lot of the plant-based substitutes that we're seeing at the moment. So I think we're on the verge of a big food revolution, which will help people make the right choices.
Well, some people, I think, would argue that part of that food revolution includes different agricultural methods. And I'm wondering where you fall on vertical farming, because it's really hot right now here in the U.S., but there's been a lot of pushback on the environmental impact of it. So in the last minute and a half that we have with you, talk to us about that.
Well, I've seen a lot of investors lose their shirts on it, and I think they'll continue to do so. And this isn't an environmental argument. This is a business argument. They're going head-to-head with horizontal farming, which doesn't require those big infrastructure costs, those load-bearing structures which are required. And also, of course, doesn't require the artificial light which is needed in vertical farming, because horizontal farmers get their sunlight for free. So I just don't think it's economically viable. And I think the entrepreneurs investing in it will continue to see their businesses fold.
George, in the last 40 seconds we have with you, leave us with one thing apart from not eating meat that kind of gives you hope for how we can move forward.
The switch towards perennial grain crops where the plants last from one year to another and you can keep harvesting. These are being pioneered by the Land Institute in Salina, Kansas, and it's really inspiring to see what they're doing, because this causes far less damage and those crops are much more resilient to climate shocks and other environmental disasters too. They could be one of the formulas for helping us survive the terrible impacts that we're seeing at the beginning of this century.
George, you've given us a lot to think about. We really appreciate it. You staying up late in Oxford, England, and taking the time to join us on Bloomberg Business Week. George Monbiot, the author of Regenesis, Feeding the World Without Devouring the Planet. That is going to do it for this edition of Bloomberg Business Week. This is Bloomberg Radio.